As the stock market continues its sideways move for the year, some people will call this boring. We're going to call it normalization, and in this case, boring is a good thing. Economic numbers recently come out, definitely showing that inflation is taming and things are headed in the right direction. Jobs market, not good right now. Jobs are getting shed left and right, all the way from Silicon Valley to Wall Street, and this is going to play a major factor this year. In the housing market, mortgage rates, definitely moving in the right direction. Welcome back to This Week in Mortgage, everybody. My name is Sam Battagna, your favorite mortgage broker here in California at Guaranteed Rate in Beverly Hills. Hope you're having as good a week as you can. All right, well, the stock market is going sideways for the most part for the year, but things are normalizing, meaning people that are selling stocks are typically buying bonds, and vice versa. And this relationship between stocks and bonds that we all grew up understanding and being educated in is indeed normalizing, and this is what we want. Now, as I said before, this is going to be a stock picker's market this year. Rising tide will not lift all boats, as there will not be a tsunami of money sent into the system by the Federal Reserve this year. So when it comes to stocks, expect a sideways, boring year with some outliers when it comes to stock picking. Moving on to the recent economic data that is suggesting a further normalization of our economy and our markets. And there's going to be some outliers, of course, as we go. Like this week, all the talk is about egg prices and egg supply. The other day at the grocery store, I could only buy 2 cartons of eggs if I wanted, which I thought to be a little bit strange. So we're going to see all these things happen. A lot of these things are headline grabbers, clickbait, that we're not going to have any eggs for Thanksgiving and whatnot. That's all nonsense. I bet you in about 3 weeks from now, we won't hear any problems about eggs anymore. But the economic data is coming good. Inflation is taming, and for the first time in a long time, home builder sentiment is up. Now, home builder sentiment is an important thing because we need more shelter in this country. But the fact that they're feeling better, I don't think they can build enough to keep up with demand. But the fact that they're feeling better is a step in the right direction when it comes to inventory. Moving on to jobs. Now, I think jobs is going to be the main thing of the year. Jobs. You know how much I love jobs. The jobs market also went through a severe inflation period during the thing that we dealt with for the last few years, where companies were hiring left and right to meet the demands of that day. Well, those demands, just like inflation, have now subsided. As you know, jobs, in my opinion, and I dare anyone to argue this with me, are the number one driver of the economy when it comes to real people, because jobs are going to create a lot of sentiment and confidence. And based on how people feel about their jobs, they're either going to go out and spend or not spend and support the economy. So all of these jobs losses are a really bad thing. And on top of that, these just aren't jobs. These are actual high-paying careers that are not replaceable. And that's the thing about this. We're not losing jobs that can be created or displaced any day of the week. These are real career jobs. These are high-earning individuals. And I guarantee you, somebody this morning that lost their job at a big tech company could not fund their mortgage when they went to go verify their employment for the last time before funding. So this jobs loss thing is a big deal all across the economy, and especially in housing, because these are high-paying careers that, of course, helps support the housing market. And moving on to, one quick note. I believe that the jobs this year will be extremely weak, and that is going to be the number one reason the Federal Reserve lays off, is when they see the jobs market, in my opinion, in some areas collapse, and the Federal Reserve will have to lay off. All right, mortgage rates and housing. So, very interesting right now. So a 3.5 yield on the 10-year Treasury has been acting as the floor for the Treasury for the last few months. Now, for the last couple weeks, it has been acting as a ceiling. That's the 3.5 yield on the Treasury, and right now it seems to be a big pivot point. So it's working as a ceiling now and not as a floor, which supports our argument that we made last week and the last few weeks that mortgage rates and yields are headed down. Also, when it comes to mortgage rates, the extra layer of fear-based pricing seems to be dissipating. It's not all the way gone, but this naturally, on a one-to-one basis, all things equal in the Treasury and the mortgage-backed security market, this extra layer of fear will naturally bring rates down a little bit. And housing in general, people should not be scared of the value of their home. I said this a few months ago. If you bought at the top of the market and the value of your home goes down 15 to 20%, don't have your feelings hurt so much because number one, if you dealt with me or another mortgage person, you borrowed probably 70, 80% of that money that you may have overpaid on your house. If it does come down in value a little bit, that froth and that fluff, you borrowed typically 70 to 80% of that fluff, and you borrowed it at roughly half the interest rate that interest rates are today. So anybody who bought their house at the top of the market that has financing shouldn't feel bad, because I guarantee you, if you look at the numbers on paper, you'd borrow that money all over again, because the carrying cost of that extra fluff, which is the reason that extra fluff existed, the cheap money out there for mortgages, justifies the carry. So don't get your feelings hurt if you paid a little bit more for your house, because odds are your financing that you did, you'd borrow that money and pay that same price today. And again, lack of shelter is always going to lead, right now, which I think is going to happen for the next decade, is always going to lead to a supportive environment for housing prices. Okay, everybody, that is my show for this week. I hope you had as good a week as you can, all things considered. And thanks as always for watching. Any mortgage-related questions, please don't hesitate to reach out to me. As always, please take care of each other. Have a nice, safe weekend. Thank you again.